Deutsche Bank's strategy desk just argued that the hyperscaler capex surge is not crowding out buybacks. Hyperscalers cut their own buybacks to essentially zero. The rest of the S&P 500 just printed a record $270 billion buyback quarter. The beneficiary cohort, the chip makers and capex suppliers, lifted buybacks from $15 billion to $30 billion. 3 weeks earlier, McElligott looked at the same data and called the hyperscalers a funding short. Goldman's John Flood reinforced the bullish red on Wednesday. Google raised $40 billion in primary equity on June 3rd. SPCX went public for $75 billion on June 12th. That's $115 billion of fresh paper hitting the market in 14 days. And on top of that, retail traded 33 billion shares on June 18th, the largest single day in U.S. history. Flood's recommendation, even with all that supply, is still to stay long AI infrastructure. Hedge fund positioning is where the disagreement actually lives. Gross leverage sits at the 4th percentile of the trailing year, net leverage at the 74th, the long-short ratio at the 98th. Funds shrunk their books and pushed their net length higher at the same time. They sold the shorts, they kept the longs. Flood reads that posture as room to add. McElligott reads it as fragile. Both are looking at exactly the same set of numbers. On the credit side, Goldman's Amanda Lynam wrote a software lending note that scored 95 in our pipeline. That's the highest score we've seen in 3 weeks. Her view is dispersion, not deterioration. Loan prices stabilized in early 2026. Data infrastructure and sticky application software hold their marks. Legacy SaaS gets repriced for AI disruption. The 2028 maturity wall is the date that actually matters. On the Fed and gold, two desks split on the magnitude. UBS ran their sentiment model over Warsh's first press conference. Only 5% of his remarks were policy relevant, against 25% under Powell. The 5% that did land was hawkish, but UBS calls the overall stance restrained. Deutsche Bank's gold desk takes the hawkish risk more seriously. Their base case for Q4 2026 is $4,800 an ounce. The risk case is $3,800 an ounce. The risk case is $3,800 if the Fed delivers 3 to 4 hikes. Here's the actionable read. Morgan Stanley's specific recommendation is long 30-year EU joint issuance versus swaps on a structural bid into the back half of 2026. Hold gold on Deutsche Bank's framework. On the equity side, no new pair recommendation, because the desks that produce the bearish-looking data are not the desks recommending the bearish trade. Stay light into NFP Thursday. Real positioning starts when the banks kick off Q2 earnings on July 13th. Daily synthesis of what the big banks and Wall Street quants are seeing. Follow.